Hi, and welcome to another market analysis video from thestealthytrader.com. We're going to take a look at the index, both a longer term chart and a intraday chart. This is the longer term daily chart, and as we've experienced for at least 7-8 months, perhaps even up to 16, 17, 18 months, the market is more or less in the same place now as you'll see in this chart. This is today's action, and this was February 17th, and if you draw a line across, we are more or less exactly where we had been, which kind of makes the trading a bit more challenging as we're prone to jump at extremes. It's only human nature, and due to whatever the reason is, a lot of talking heads with their take on why this market is has such minimal interest. It doesn't matter why. All that matters is that's exactly what it's doing. There's just really no interest at this point in this market, and has been that way for a while. So what this means, net is you have to be selective in your trades, and you have to be prepared to punt, get out, or if you really grab something that starts to work out, you can't be afraid to put your foot down on the throttle. So again, this is the daily chart, moving averages. I would say perhaps it would mean something that the red 20-day crossed above the 50, but it's happened before a lot of times, and not much more to make out of this except on the upside here, this clearly seems to be resistance now in the Dow, 18,170. We closed at 18,144. You see these sticks over here, these stalks I like to call them, the candle, the upper shadow. What that shows is that during the day there was a move above key resistance, but only to close back in it. Same thing for yesterday, same thing for 3 days ago, same thing for 3 weeks ago. You get my drift. What that indicates to an experienced candlestick analyst like myself is no doubt it's choppy, and proceed with caution because it's failed on the upside a lot of times. This failure up here is just, I mean, what can you say about that? After all the sideways, this was in May 14th. You have a really nice candle. You have the beginning of daily moves higher. Anyway, so the chart says it all. And so I am very suspicious until there is a confirmed breakout. And on the downside, it's the same story. What was observed here that is somewhat positive, and again, I use somewhat, is right here, and I'm going to put a drawing in, a price level, and I know I have a bunch of pink lines here, but I'm putting one in right now at 18,120, and not this one here, which I'm going to take out because I don't want to confuse the viewers. By the way, we use TD Ameritrade for analytics. We have an endorsement relationship with them, so by all means reach out to me, and we can discuss how you could utilize our exact platform overnight, save you years of work. So again, what I was saying here is this bottom here. So we have a type here, 18,200, and this area here, even though we took off from the open, we did close above this 18,120 area. So for now, hopefully it'll stay above that, and we'll work on getting through the highs. Let's look at an intraday chart. Hi, so this is an intraday 30-minute chart of the Dow, and you know, sure, if you go back 5 days, a week, you're going to see 2 weeks, 3 weeks, 7 weeks. You're going to see a lot of this. A lot of this choppy, going to break down. No, let's move higher. We don't want to move higher. Let's break down to the middle retracement, back to the bottom. Bang, Monday, first candle right off the open, you know, is it Greece? Is it China? Is it not Greece? Is it the Fed? FOMC? You know what? Nobody knows. And right now, it doesn't matter. This is Monday. This is Tuesday. What we're able to do here is kind of get a head start on some opportune, quick ins and outs due to our ability to chart the indices. And as you can see here, I'm going to again draw a price line right there. And I want to concentrate on this now. As you can see, Monday we broke out through a prior line down here and we rallied, consolidated, bang, the third 30-minute candle from Monday heading north. No, we're not. Right back down. Then a test of this level. So you start to see at this 18,140 area that at least for Monday it was first support, then resistance towards the end of the day. Today, Tuesday, the first candle, you know, volume and interest, volume will turn any chart resistance or support level into mud in 2 seconds if there's enough interest, right? And that's what happens on opens. That's where all the interest is, unfortunately, and all the volume. So on the open today, we powered through. And then for the rest of the day, it's again a battle for this midline here. So as far as a quick in and out trading, it really is important to know where this is. Because, for example, here, this was noon today, Eastern Standard Time. You have this pullback from the first candle. The next 3 candles were decidedly bearish. Again, I'm talking really micro intraday here. And then you had this candle that looked like, okay, here we go, back down to 18,000 again. But this is an interesting candle here. We love these. These are back down, and now that everybody stopped out and faked out, let's take it higher. So these 2 candles is all we needed to see to kind of jump in on what we already had our eyes on as stocks that had a decent amount of support. And we were able to, for the rest of the day, we were able to enter 1 or 2 nice trades. It ended up in the middle of the line. Here's Wednesday. If we knew what Wednesday's chart looked like, it would be like Back to the Future, having the scores for the football game a week ahead of time. We don't, but I would imagine that this middle line here, 18,140 area, is going to play some role, and 18,180 on the upside, and that's about it. On the downside here, 18,100. Those 3 levels, 1, 2, and 3. So that's it for the index, and look forward to seeing everybody. If you want to reach out, I would love to hear from you. Put the link in the video description. Thanks.